You are listening to Investing Matters, brought to you in association with London South East. This is the show that provides informative, educational and entertaining content from the world of investing. We do not give advice, so please do your own research.
Hello and welcome to the Investing Matters podcast. My name is Peter Higgins and today I have the privilege of speaking with Sharon Bentley-Hamlyn. Sharon is the founder, director and has been responsible for the European strategy since its inception in 2008. Sharon, welcome to the Investing Matters podcast.
Hello, Peter. Thank you very much for inviting me today.
Thank you for being here with us. Now, Sharon, I want to start our conversation, if I may, because originally you trained as an opera singer before becoming a financial wizard, as I may say. Please, could you share with us your opera training, what was involved, and what made you decide on a career in finance?
Opera singing was really the culmination of my musical training, not the start. I'd achieved a fairly high level of ability on the piano before even thinking about singing, but changed course during my undergraduate years, where practicing at the keyboard for 6 hours a day was not really compatible with getting an academic degree. Of course, if you sing for 6 hours a day, you will destroy your voice. So singing was more compatible up to a point. When I graduated, I took a job at Sotheby's for a year, but then switched to part-time temping to support my opera training, which involved studying in Italy and Paris with various teachers, including one of Pavarotti's coaches. Suffice to say, I didn't have Pavarotti's voice or talent, otherwise I wouldn't be here speaking to you now.
Oh, I love that reply, thank you. Now, Sharon, you studied in Italy and Paris, so are you fluent, competent in both Italian and French? Do you speak other languages? And was being multilinguistic something that enabled you to stand out from other finance candidates when looking for a role in the finance industry?
I'm pretty fluent in French and Italian once I get going. It's a long time since I've lived in either country. I always had an interest in foreign languages, and I'm reasonably competent in German as well and can read in Spanish with relative ease, but I'm less confident speaking it. The languages were my door opener into the financial sector at both CCF, that's Crédit Commercial de France, and Walter Scott and Partners. At the former, they needed someone to type up their lengthy reports in French, and at the latter, they had no one with any linguistic ability at all and had recently taken on a European mandate. At that time, in the early 1990s, a lot of the smaller companies in Europe did not have English-speaking management, and so you had to do the management interviews in French or German. So it really gave me an advantage to be able to do that. Also, I believe that in order to understand a culture and even how business operates, you really do have to immerse yourself in the language. That is why I've always felt I have more to offer in European equities than, say, Asian equities, where I don't speak the languages. Fortunately, I'm married to a fluent Cantonese speaker. I have taken in a reasonable amount of knowledge about China from him, which is important in today's world.
Brilliant, I love that reply. Thank you very much. Now, Sharon, you started your career, as you say, at Crédit Commercial de France as an analyst in the mergers and acquisitions division. What was your favorite memory of your time at the beginning of your career?
Working in the M&A division of CCF around the time of Big Bang was a great introduction to the world of finance. Of all the temp jobs I had ever had, it was by far the most interesting, which is why when interest rates spiked to 15% in the late 1980s, and I was faced with finding the monthly payments on my mortgage, I decided to apply to them for a permanent job. The best thing about it was the sense of excitement and the quality of the individuals I was working with. It set the standard for the quality of work I should aspire to produce in the future.
Thank you for that response. Thank you. Now, please can you share with us your thoughts now looking back on your formative finance experience during that Big Bang deregulation of financial markets era?
It's really hard to convey the sense of newness and excitement of that cross-border M&A division of CCF in the mid-1980s. CCF had taken over a city stockbroker called Lawrence Truss, and they already had a UK M&A division, but the cross-border one was new. And the people brought in to run it, both English and French, were very clever and motivated. We frequently worked up to midnight on deals, ordering in the pizza. I got on well with my original boss, who, in addition to being a financier, was also a very fine amateur cellist and used to play as an extra for the London Symphony Orchestra.
Wow, that sounds fascinating. Now, you've already touched on one there. So who were the individuals who inspired you during your career at CCF, and what were the greatest lessons and takeaways from that time?
One individual in particular, Dominique Carrel-Billard, who had recently joined as a graduate, but was hugely intelligent and productive in both English and French, and clearly destined for great things. He had this kind of aura about him, even at a very young age, which everyone recognized. He subsequently went on to become a partner at McKinsey, then CEO of AXA Asset Management, and now has a senior role at Amundi. The other great role model from a totally different perspective was my erstwhile employer, Dr. Walter Scott. Walter was also hugely intelligent with a postgraduate degree in nuclear physics from Cambridge, but it was really his persona and formidable ability in marketing that singled him out. He would travel the world in a kilt. Legend has it that when he visited a garment factory in China, all the workers, mostly female, simply downed tools as they looked up at this apparition in a kilt, and the factory, previously a hum of activity, went completely silent. Of course, it's impossible for me as a woman to emulate either Dominique or Walter. I'm a quite different personality type, much more reserved, but I hope I gained something of Dominique's work ethic and some of Walter's investment wisdom. It was certainly Walter who gave me the opportunity to pursue a career in investment and set me on the path of company analysis that has enabled me to reach the top of my game.
And I love the thought of just walking into a massive place that's humming and busy and wandering in a kilt and everything just stops. That's absolutely fantastic. Now, as a founding member of Aubrey Capital, what was your original philosophy when you and your co-founders started the firm, Sharon?
When I joined Andrew Dalrymple and his colleagues, who had been at another Edinburgh firm, Stuart Ivory, First State, the initial discussions around philosophy were crucial. We were both growth stock investors, but we had to work out what philosophy was behind our most successful past investments. We came up with what we subsequently called the theory of wealth progression, which directs us to different areas in the market depending on the level of economic advancement of the region we are investing in. Simply put, we need to follow where the money goes, which is likely to be towards basic infrastructure and consumer goods in emerging markets and more sophisticated goods and services as economies advance. This provides a repeatable model for investment. Beyond that, imposing high financial hurdle rates for a stock's inclusion in the portfolio is a hugely important discipline and risk mitigation tool. As a growth stock investor, for us to be interested in a company, it must fulfill the basic rule of being capable of a 15% cash flow return on assets or self-financing growth rate, a 15% return on equity, and 15% earnings per share growth. In the case of the European stock universe, this effectively reduces the opportunity set from 3,000 to 200 companies. Our watch lists are comprised of a very select group of highly profitable businesses.
It's a very select criteria indeed. Now, thank you for that reply. Now, what was the closing amount of assets under management after the first year of Aubrey Capital being launched, and what is the AUM now?
We had a single-digit amount, and a single-digit million amount, just a few £1 million under management. None of the partners took a salary in the first couple of years. We now have £1 billion under management and 32 staff.
Fantastic. Very, very well done. Now, has your success as a female founder and female fund manager led to more men in the industry rightfully recognizing the benefits of a diversified and the attributes of females can bring to outperforming benchmarks? Sharon?
No, in a word.
That's so sad.
Yes, it is sad. When I think of my days at CCF in the 1980s, where there were several very talented women working in the department, I was utterly astonished to learn from the CityWire Alpha Female report a couple of years back that only 10% of the funds they followed were headed up by a female portfolio manager. And over the last couple of years, the percentage has risen to a measly 11 to 12%. I had been shielded from that reality by the fact I've worked for 2 boutique firms that had a reasonable number of female analysts. There is a lot of noise currently about the underrepresentation of women in our industry. It is easy to understand why, but not so easy to rectify, and it will take time. I believe it starts at the grassroots, and we need to get more girls applying to work in the industry. Then there is also the cultural aspect, which needs to be changed to make the working environment more conducive to women. At Aubrey, we have avoided the very combative, intellectually aggressive style of our previous houses and work in a much more collegiate way.
Yeah, that's important to work and try and nurture others. Now, Sharon, you're a leading female role model in the fund management industry, rightfully so. Please can you share with our listeners some of the barriers, issues you face as a woman in being successful in this field? How did you overcome them? And how are you endeavouring to nurture a fairer, more equal path for young females at Aubrey Capital and in the wider investment industry?
Well, let me preface what I say with a general observation that I personally have been extremely fortunate in my career in that I've not been overly burdened by the prejudices and issues faced by many women. I think it partly comes from my background of having observed professional women in previous generations of my family and how they operate. I just had an awareness right from the start that for women to get on in business, they have to be serious, sober, hardworking, self-disciplined, and probably work harder than most men to prove themselves. I recently discussed the issue of these persisting gender issues at work with a cousin of mine who is also very successful in her field and an entrepreneur like me. She made an ostensibly flippant comment that we were helped by the fact we inherited tall genes from our grandfather, who was 6'4" tall, which was tall for people born in the 1890s. And thinking about that, height is an advantage both for men and women. Short men have to work harder and have more forceful personalities to stand out. There are several very well-known individuals in the business world who fall into that category. With women, if you're small, with a high-pitched voice and all fluffy, you will have a lot more difficulty being taken seriously. Also, as a rule, women are less comfortable putting themselves forward than men are. And in investment management, you really have to be confident and articulate in presenting your ideas. At Walter Scott, my previous employer, one of the partners who interviewed me in the first round leaned across the boardroom table and said, "Pretty girls go and get married, don't they?" The implication being that I would leave within a few years and their efforts in training me would be wasted. And without missing a beat, I replied that, yes, they do get married, but they also have to work. And my mother worked as a lawyer and a judge until she was 70. When I came back from maternity leave, and I was the first employee there ever to have taken it, my male colleagues assumed that my brain had gone to mush along with motherhood. It was pointless trying to explain to them that in actual fact, looking out for a wee one meant that you had to be super alert with eyes in the back of your head. So if anything, your mental powers were enhanced by motherhood, not diminished. But notwithstanding all this, I was the first of my intake group of analysts to make director status some 5 years later. So my male colleagues must have come round in the end. Maybe if I'd taken more time off to have more children, it would have been more difficult. I'm full of admiration for Helena Morrissey, who has managed to combine an incredible career with bringing up 9 children. But I guess she is a really exceptional individual. For the vast majority of women, we can't have our cake and eat it. Something has to give. The good thing, though, about investment management as a career for women is that if you take a maternity break, you can pick it up again because you've learned the basic analytical techniques. It is also a results-driven business. You either make money for your clients or you don't. And if you can, you will get on. Nor is success in this business down to intellectual brilliance. Some people have great brains, but they don't have a feel for the markets and they can't make decisions. I do count myself as extremely fortunate to have been employed by a firm whose investment philosophy made total sense to me. I took to it like a duck to water and have never deviated. It's a tried and tested methodology based on investing in cash-generative businesses that can self-finance their own long-term growth. But the process I learned at Walter Scott has been enhanced and improved through my own long experience at Aubrey. And it is this that I convey to young analysts I have brought into the firm. Of the 6 or so that we've employed, the majority were women. We've employed 3 Chinese, an Indian, and a Swedish Filipino national, compared to just 2 young men. This wasn't conscious bias. It was done after lengthy interviews and on the basis of merit.
Brilliant. I love that full reply. Thank you very much, Sharon. Now, please, can you give us an overview of Aubrey Capital and what differentiates it from other asset management firms, please?
Firstly, we're a boutique, not an institution. So I have time as a senior manager to get to know everyone, which isn't always the case in bigger firms. We want everyone on the investment team to buy into our investment idea. So when we research a stock, the whole team is involved in meeting management and in the ongoing maintenance of the investment. And by that, I mean following the company's quarterly earnings announcements, updating financial spreadsheets and purchase notes, taking company visit and meeting notes, and so on. Managing healthy portfolios means a vigorous ongoing research effort to see if there's anything outside the portfolio that has better prospects than the stock we are already invested in. We want the portfolios to really motor, so we do not let our staff get hung up feeling they have to justify an investment simply because they've been a major proponent of it in the first place. We don't allow ourselves to fall in love with stocks. Average turnover is higher than most growth stock managers. We're not buy and hold forever merchants. A typical holding period would be 3 years, but a few investments we've held for 7 to 10 years. We believe our value added is in finding somewhat under-researched stocks and getting into them before everyone else does.
Yes, always getting early and getting to the trend, as they say. That's a really good idea. Now, Sharon, please, can you talk us through an example of an investment that did not quite play out as it should have done, and what were the lessons learned from this, please?
We were early into the solar industry in 2007 to 8. The stocks, mainly German solar cell and module producers, worked well in the first year, doubling in value, and then crashed during the global financial crisis as cheap Chinese competition came into the market and commoditized the industry. The lesson learned, of course, is that good ideas may not stay good ideas forever. And if the margins are really fantastic, it invites other competitors to play in the industry. We're back in the sector now, but through owners of solar plant rather than the module producers themselves. And the cheaper those modules are, the better it is for the utilities, the solar plant owners. The prospects look good as they ramp up capacity with ever-increasing demand for alternative sources of energy. The high price of conventional fuels is an added incentive for people to switch now.
Thank you for that. I think, yeah, you're right there. Sometimes you can almost be too early and be ahead of the game, so it can cost you sometimes. Now, on the opposite side of that, Sharon, please can you tell us one of those long-term investments that proved super successful for you and profitable for including, and also in your reply, can you include for me the analytical and fundamental characteristics you identified that led to this level of conviction and the level of success attained from that investment, please?
We invested in ASML back in 2014. ASML is the world's leading producer of lithography machines for the semiconductor industry. These produce the patterning on the wafers, which allows chip makers to pack ever-increasing numbers of transistors onto them, which give the resulting chips their processing power. When we first analyzed the company, it was already displaying the financial characteristics we look for, a return on equity and cash flow return on assets above 15%. But the company was trying to increase wafer throughput on their latest generation of lithography machine, the so-called EUV, extreme ultraviolet. We knew this might take 2 or 3 years to achieve full commerciality, but it happened, and it has been an extremely good investment. From our initial purchase price, the share price is up some 560%.
Yeah, very, very well done. Commendable to you and your team there. Now, Sharon, how much importance do you put on psychology with regards to combating over 200 cognitive biases we all face as investors, and more so as financial fund managers, where your monthly and quarterly returns are being measured meticulously?
Absolutely none at all. I try not to clutter my mind with psychobabble and just stick to the investment process. Our process is very numeric and very disciplined. It's a tried and tested method which has worked for me for over 30 years, and that mitigates some of these biases. The process includes an important maxim, keeping the portfolios fresh, and we would expect to see 1/3 of the names change annually. We don't fall in love with our stocks. If they've done really well for us and are looking expensive, we will sell them. Sticking to the investment discipline is really important.
Thank you for that. Now, Sharon, you are the head of research and the lead fund manager for Aubrey Capital's European strategy. Firstly, how has your strategy fared during the past 12 months after Brexit vote? And secondly, how it's performed since then?
The fund fell 8.5% between the end of May and the end of June 2016 over the period of the Brexit vote, but rose 23% over the next 12 months. And since the end of June 2016, the NAV of the fund is up 96%. Now, stock markets go up and down, and there can be quite long periods of drawdown. That's why if you're investing in equities, you should only do so with money you can afford to set aside for a minimum of 3 years, and preferably 5.
That's exceptional. Very well done, Sharon, to you and your team. Now, Sharon, you've managed the European Conviction Fund since 2008. Please tell us how the fund has performed since inception, and what has been your greatest challenges, lessons, and greatest successes, please.
Inception in March 2008, it's up 200% versus 96% for the index. The greatest challenges? I don't really think about running the fund as being particularly hard or challenging. It's mainly a pleasure. But looking back, I have to say that managing the fund through the global financial crisis was pretty dispiriting, as it hit within 3 months of starting the European strategy. Many businesses went to the wall at that time, but we didn't, thanks to faithful clients and a lot of determination. The clients have since been amply rewarded for their constancy, and I am so grateful for that. The best reward is in feeling you've done a good job for people, particularly as in this instance, the long-term supporter of our European strategy is a European philanthropic organization. As to lessons, a career in investment is all about developing investment judgment. You can learn all the analytical techniques and be a good analyst, but developing judgment comes over many years of getting things right and getting things wrong. Part of this is down to timing, and market timing is notoriously difficult. There are times when, given a free hand, I might have gone 50% or more into cash, but the clients want you to invest in stocks and make their own cash decisions. If you go into cash and the market goes against you, i.e. up, it's fatal for your client relationship. As to successes, I suppose the founding of Aubrey, which supports 32 members of staff and their families, is the greatest success. The fact that it's a very nice place to work as well, with a great, energizing, entrepreneurial, but still compassionate culture is an added bonus.
I love that response, and fantastically well done in achieving 200% since inception, Sharon. Very well done. Now, in summer 2021, Aubrey Capital launched a version of its European conviction equities funds that exclude UK exposure and only holds continental stocks. Please, can you tell us more about the SVS Aubrey Europe X UK fund and its strategy, and your goals and aspirations for this new fund?
We launched this fund for investors and wealth managers in the UK who prefer to asset allocate separately between the UK and continental Europe. The fund comprises all the continental stocks in the main strategy, plus 2 or 3 other smaller cap names. It's been going just over a year and is available on several platforms, including Hargreaves Lansdown, Centric, Aviva, Nucleus, and Transact.
Thank you for that. Now, with regards to investing in Europe, where are you seeing value and significant opportunities at present?
Growth stocks in Europe have been significantly sold down this year due to rising interest rates as central banks try to control inflation, which has been unleashed by years of money printing and compounded by the economic fallout of the Russia-Ukraine war. Our own portfolio is trading at valuation levels not seen since the global financial crisis, but the earnings growth prospects are much better than at that time. There are opportunities in technology and industrial stocks, in renewable energy and infrastructure, a wide variety of sectors, in fact.
Thank you for that. Now, Sharon, how has your Aubrey European conviction strategy been performing of late and longer term? What has been the key to your long-term outperformance across Europe, and where many of the other funds and your peers have floundered?
Yeah, to date, the strategy has fallen 28% versus a 10% fall for the main European index. But over 3 years, the fund has made 27% versus 17% for the index. And over 5 years, 54% versus 28% for the index. We're in a period of drawdown right now, but therein lies the opportunity. One can never say when the trough might be reached. Maybe it was already back in June. Nor can one say when the geopolitical situation, particularly regarding Ukraine, will ameliorate. However, one can say that this is an exceptional drawdown for this group of quality stocks and represents a cheap buying opportunity for long-term shareholders. And on the drawdown analysis of the strategy since inception, it would be fair to let people know that the longest period from top to bottom has lasted 30 months during the global financial crisis. We are currently in our seventh month of drawdown. So if the previous longest drawdown is anything to go by, our stocks may have regained their previous highs within the next 2 years. But as I said, investors should have a minimum 3-year investment horizon.
Very, very good points made there, Sharon. Thank you very much. What are your thoughts and views on interest rates and inflation looking into 2022 and beyond, Sharon?
High interest rates and high inflation are not entirely negative for all types of companies, so long as they can pass on higher prices and protect their margins. Higher interest rates are generally considered good for banks and bad for companies with high levels of debt. We rarely invest in banks, but we never invest in companies with very high debt. Typically, our companies have low or no debt. High interest rates and inflation are not good, though, for consumers, and our exposure to the consumer sector is more limited than usual and restricted to very stock-specific cases where demand will be less influenced by these macro factors.
A very important point you've made there regarding debt and what we've just seen recently regarding Cineworld potentially going out of business and the bankruptcy there. So thank you for pointing that out again. Aubrey Capital are now signatories to the UNPRI, and the fund is recognised as Article 8 under the European SFDR. Please, can you explain to our listeners what UNPRI and SFDR are, and also why it is this process and inclusion by Aubrey Capital so important?
UNPRI are the United Nations supported principles for responsible investment around human rights, labor, anti-bribery and corruption, and environment. SFDR stands for Sustainable Finance Disclosure Regulation, and Article 8 funds are defined as funds which promote, among other characteristics, environmental or social characteristics, or a combination of those characteristics, provided that the companies in which the investments are made follow good governance practices. It's a long definition. Signing up to UNPRI and SFDR involves subjecting the whole firm and its various strategies to external scrutiny on the subject of ESG, environment, social, and governance issues. It involves completing lengthy questionnaires annually and submitting them to the UN and the Luxembourg regulator, and ongoing scrutiny of the companies we invest in to encourage best practice.
Those are very, very high benchmarks to maintain, I imagine.
Onerous.
Yeah, very well done. Now, Sharon, in the category of Fund Manager of the Year, you're awarded Highly Commended in Investment Week's Women in Investment Awards 2021. How does it feel to have your success recognised by the industry?
These industry accolades are very welcome if they lead to more recognition of what we are doing here at Aubrey. But I feel slightly sad that there have to be Women in Investment Awards at all, because I would have hoped after 30 years in the industry that women would be more fairly represented, and that we would think it as strange to hold such awards as we would men in investment awards. But such is the state of affairs. I'm more proud of the fact that we were awarded Best in Class for Europe Equity in the Benchmark Fund of the Year Awards in Hong Kong last year, because in addition to fund performance, the judges took a long, hard look at our approach to ESG, and we came out way ahead of the competition in our class, both male and female. I think the fact that we can run funds with great performance that are also highly ethical is what I'm most proud about.
Very, very good. Brilliantly done. Now, as more and more investors are choosing ESG-related funds and investments, our Aubrey Capital facilitating these investments demands, which are getting higher and higher and higher.
ESG has been incorporated in our way of investing since inception 15 years ago. We've always invested on the do no harm principle, but today we have a very detailed questionnaire which is applied across all stocks, and we're looking to invest in companies that have a beneficial impact. All the companies in our fund score highly on our methodology. It's not just a question of allocating a box tick either, nor of investing in the least bad company in a controversial sector, what's known as the best-in-class approach. We operate a lengthy exclusion list. We won't invest in arms or armaments, alcohol or tobacco, gambling or pornography, fossil fuels, genetic modification, nor pharmaceuticals. In this way, we manage to avoid almost entirely the more controversial areas, and we won't compromise on this principle. Of course, not everyone shares the same ethical concerns, and it's really up to individual investors to check with their managers whether their money is being invested in companies they approve of.
Very, very good. Fantastic reply. Thank you. Now, what are your processes, triggers for selling and exiting a stock?
We run fully invested portfolios of no more than 40 stocks. So generally, if we want to add a new name, another must be sold. So in the stock research process, we're constantly on the lookout for companies that might give us better returns than ones we already hold. Keeping portfolios fresh is important. Valuation might be a trigger for trimming or selling a stock which has done well. We buy on pegs, that's price earnings to earnings per share growth rate. So price earnings to growth rate below 1.5 times, and usually sell or trim at 2 times. Then we have a maximum stock weighting of 5%. So if a stock starts to exceed that, we will sell it down. And we have sector and country exposure limits too. We would also sell if our subsequent research led us to believe the company might not make our hurdle rate of 15% earnings per share growth in any given year.
Brilliant. That's very strict indeed. Now, what are you looking for in the leadership in a company to enable you to make an investment with their company with conviction?
We meet the management of all the companies we invest in, and they need to impress us with their knowledge of the business, their awareness of their responsibilities towards investors, staff, and stakeholders, and we need to be reassured that they run their businesses in an ethical, responsible way.
Brilliant. Thank you for that. Now, what is a guiding leadership strength or principle that has guided your career thus far? Please, Sharon.
Total belief in what I'm doing and the desire to do my very best and communicate that to others, particularly of the younger generation.
Brilliant. Now, many UK investors are essentially UK-centric in their investment approach and investment strategies. I gather from recent interview you were quietly confident that investors can make money by having some European listed exposure. Please, can you share with our listeners an example of a type of company you are invested in that simply doesn't exist in the UK?
I mentioned renewable energy before, and we have a stock in Europe called Renovables, it's quoted in Spain, which focuses on the development of large-scale renewable energy plants. Historically, mainly solar, though they have some wind power now in the pipeline. UK is bigger on wind power than solar energy for obvious reasons. There are no solar investments available that I know of in the UK market. Most of Renergy's existing capacity is in the Atacama Desert in Chile, one of the most arid but still inhabited regions of the globe, and also in Spain. Looking forward, they have projects in 6 other countries: Italy, UK, Poland, Colombia, Peru, and the USA. Sales and earnings could easily double for them over the next 3 years.
That's great. I'll have to look at that myself, I think, Sharon, going forward, given the energy crisis we're currently having. Now, Sharon, you have a son. Has he shown any interest in pursuing a career in investment or the finance industry?
Well, we thought he could do something perhaps more creative, let's say, and encouraged him to read engineering at university. He completed his degree, and then he did a short internship with us and decided he much preferred investment. And he's currently working for the Bank of England in London. Not quite sure what to think about that. I suspect it was in the genes all along.
Wow, that's fantastic. You must be very, very proud indeed.
Well, we'll see how that goes.
Thank you. Now, I've got a final question for you, Sharon. Please, can you tell me the new addition to your family? Yes, I'm referring to your foal. How long have you had a passion for horses? And what other non-investing hobbies do you have? And what charitable organizations are you aligned to and associated with?
I've been passionate about horses for as long as I can remember. My horses, a bit like the staff, are all very different, and getting to know them individually takes time, but they are incredibly rewarding. Horses are great communicators too if we listen. The foals, I've got two actually this year, are just enchanting to watch in their play, but they grow into adults far too soon, just like our children. I've been associated on the charitable front with a number of small local charities over the years, but the one I'm currently most involved with is called Future Asset, which introduces girls at school in Scotland. We are located in Scotland, for if people don't know that. Aubrey is an Edinburgh firm. It introduces girls at school up here in Scotland to the employment opportunities within investment by sponsoring an investment competition where we act as mentors. We are hoping that some of these girls will apply to us and other firms in the future to start to help redress the gender imbalance. Investment is an intellectual pursuit, and there's no earthly reason why girls can't be every bit as good at it as their male counterparts.
Brilliant. I love that. I love that you're doing that with young girls as well and getting them involved and giving them an early sort of exposure to the industry. Sharon, that concludes my interview with you. Thank you ever so much for being on the Investing Matters interview with me. That was Sharon Bentley-Hamlyn, founder and fund manager at Aubrey Capital. Thank you ever so much, Sharon. Take care. God bless.
Thank you very much, Peter. It's been a pleasure.
Thank you.